Good afternoon. This is Chris Brecher with the Simpler Stocks Premium video for October 2nd, 2015. It's 4:08 p.m. and basically today we'll get right to the charts. We had a wild market. You got this thing that on a daily, it definitely looks like a bearish wedge. Looked like we were going to break down this morning when the employment report came out much weaker than expected. And as you could see on the E-minis, if you take in a 5-minute chart, look at how the market had rallied prior to the employment report, then fell completely out of bed, even though I thought it wasn't that bearish. I thought it was bullish because it was so weak. It, to me, meant that the Fed wasn't going to tighten prematurely, which usually is good for stocks. But it's all about perception, and earlier in the day, traders perceived it as poor. And then what happened is that now that everybody was caught short, once the market sort of rolled over like this, it was just on its way up. Now, there are a lot of negatives about what's going the overall market, but let me just show you on when you take a 15-minute and a 5-minute chart of the ESs, not only did we get overbought, but it was the quality of the sell-off. It stuck right here to flag. And then when I saw this, I'm like, this is like a head and shoulders bottom right here. We could go up by this amount, which let's say 1890 to 1923 is 33 points from 1924. Well, let's say right here, 1923 gets you to 1956, which is where we're probably going on Monday. So that's the first thing I noticed on here. The other thing I noticed on here is when we turned, what stocks were the best to buy. But see, my problem is when I think like that, I got a lot of emails from people that asked, what swing trades would you do? And my problem is that because I'm seeing only intraday setups because of all the negative divergences going on in the overall market, I've had to change my time perspective to intraday. And what I mean by that is when I look at a weekly chart of the ESs and a weekly chart of the NQs, I'm looking at the weekly that if the NQs, which is made up by the Googles and the Apples and the Amazons of the world, is if the NQs go to where the ESs are, you're talking about the NQs going down another 500 points. So in this environment where we're close to a breakdown, but you could also say maybe it's a double bottom, it's very hard for me to make long or short swing trades until I'm really sure of a longer term chart. So right now I'm keeping my trades to just intraday trades. Now what I saw in this, just to let you know what I mean by the negative divergences, not only does the NASDAQ look bad, but take a weekly chart, and I'm going to take a 10-year weekly chart of the high yield bonds, which usually are a harbinger of what our economy is doing or what the financial stability is within the system. High yield bonds are more risky bonds. So even though our bond market has been going to near new high, you have the high yield bonds where they were in 2012. It's a very negative thing in here that I know traders are monitoring, but that doesn't mean the market has to blindly sell off. I'm just saying it's a negative to look for in the future. If you look on the left, I'm looking at this as a potential head and shoulders, but not yet. I have a feeling that we're going to have to work off this oversold condition even on a weekly, and then we're going to take longer time to sort of build this shoulder right here before we break down. If I'm right, that will be probably around January, and if it does break, you're talking about us going down, let's say in this area, about 300 from here, gets you to around 1600 or a little less than that. So that's what I'm looking for the ESs eventually, but that doesn't mean today. So when I saw today and I saw the market start to turn, and I'll show you the ESs, and I'll show you this on a 5-minute chart. Now I'm going to take this, and then on the left, once you saw the market stabilize, and if you wanted to reach to buy something, the first thing you should look to buy are the stocks that are already in defined uptrends, at least on a 15-minute chart. So what I mean by that is you see that roll this sort of turn up here on this chart, and just keep that in mind right here. Now what I'm going to do is I'm going to show you a 15-minute chart of Amazon. And then I'm going to show you a 15-minute chart of Amazon on the 5-minute on the right. As you see on the left, you had this nice constructive pattern that we mentioned yesterday on the videos that measured from 490 to 510. The big sell-off this morning only got you to right to 510, right in the support zone. That's why you can't exactly say 510. You have to look at this zone, and it held it. Then once it's not only that, but it formed a oversold and an uptrend, which is called a positive reversal. Then what happened is, like I said yesterday, once it was on its way, its measuring implication is at least 530, and it closed above 530 today. So it went up by this measuring implication. Beautiful how that happens. Next one to show you is Google, which looked good on a 15-minute chart. And my point is here, you don't want to buy the turkeys. You want to buy the stocks that already had proved themselves, had been acting well all week. Look how Google had stayed above its ATR stop all week. Today, on the sell-off, it just got to the 635 area, becomes too oversold in an uptrend. And here's another one that if you measure here from 620 to 635 is at least 15 points. And really, you go from the above it. So you go from the breakout around this area, it gets you to between 650 and 655. So it did exactly what it showed on that. The other thing to show on this is when you get the breakouts like this, you get these violent moves. Look at Google on here, and this is how bear market rallies are in the overall market. When you get the pop over this, look how fast it went up. It went from 640 to 652 in literally 45 minutes. And that's what happens in a bear market is stocks go up faster than they go down. When normally when stocks sell off, they go down faster than they go up, but not when you're in an overall bear market. You get these just really just rip-roaring short squeezes, which is what you got in these stocks. That was the first thing I noticed. The other thing I wanted to show you were things like Facebook. And I looked at this after I got finished with trading yesterday, and I saw the same thing. Saw this highly constructive pattern. The only difference between Facebook is Facebook, sure, it got oversold in an uptrend, but it looked like it broke this support area, which I thought was around 90. So it faked you out a little. But if you're nimble, you get out, you get back in at 90 when it gets back above it. And then you would have still made 2 points. So there's no reason you can't get out of something and then get back in. Is in this market, even when you mess up, there's more than enough chances to get back in. That's on my point with that. Is things I'm looking for next week. Well, one, let me show you Apple also, before I show you anything for next week. As you see in Apple, this had a different kind of pattern because you have this trend line all the way here. Right here. And my thing is, when I saw it break 109, I figured it was going at least to its strike price of 110, which is what it did. Wasn't a real big move, but you see on a 5-minute chart on how more impressive this looked. And also see on how oversold it got. Tremendously oversold. So I'm not saying to buy it right at the low. Absolutely not. I'm saying that if you took a 2-minute chart right here, you would have seen this little head and shoulders bottom right here. Now, just so you know, I'm posting in the forums all day. I'm starting to post charts. I posted about 4 today of showing different things I was looking at. I showed the overbought in the ESs when the 15-minute was real overbought. But like I said before, just because something's overbought does not mean to short it. It means to watch what the quality of the sell-off is, or the quality of the condition to work off the overbought condition. And the ES is held up like a champ. So the other thing is I wanted to show you this little head and shoulders in Apple, and the second it broke here, it was on its way. Those are the kind of things I was looking at. For next week, I still think that we probably are going to rally, and I'll show you the objectives of what I'm looking at here. I want to put up a daily chart of the ESs, and I'll put up a 78-minute to give you an idea. The first thing you're going to notice in here is if we do continue to rally up to this level, you're going to get an overbought condition in a downtrend. So I would look for the same thing around this 1970 area is where I would be jumping in to really short it, because then this MACD is going to get overbought again. You look at a 78-minute chart of the ESs, and what you see in here is we're rallying right up to this resistance at 1943. And if I'm right about this measuring implication, we're going to get to about 1955 just to overshoot it to hurt as many people that are short as possible. That's the way I look at that. What I see on the NASDAQ is really about the same kind of chart. And the other thing that you're going to start getting in the NASDAQ is you're going to start getting a lot of earnings reports coming out. So you could get some disappointments in the Facebooks or the Apples or the Googles of the world, or they could do like last quarter where they just went nuts. So that's two things to consider. What I see on this chart is you have the NASDAQ coming up to resistance right here about 43.20, but that would also coincide with this little break right here, and it could get up to this area and overshoot 4,300 just a bit. Those are the kind of things I'm looking at. If you go through a Facebook, what I do when I see this kind of uncertainty in my trading, I'll go to a daily chart and I'll start using the MACD in a number of charts. What do you see in Facebook? You see the blue line is at 0 and the red line's hooking up. So that's a potential positive, and you can't tell yet is it going to get to 94.86? Or is this sell-off, it's just recouping half the sell-off, and now we're going to roll back down? You just can't tell yet. Like you see on here, if you did some kind of Fibonacci things, just sold off 10 points, you've rallied almost a little more than a 50% retracement. Those are the kind of things I'm watching for next week. If I wanted to jump on shorting Facebook, this is what I'd do. I would look at a 78-minute like you see on here, and you don't see any divergences yet. You see it trying to fill this gap right here about 93. But what I would do is I then would take on a short-term chart, a 5-minute chart, and I'd say, well, you're starting to see a little divergence, but you don't even think of shorting this till it starts to roll over and breaks under some of these levels. And you haven't seen it yet. It's going to be a better short when these lines start turning down and when the stock gets under this level right here, 91.47. When it gets under that, then all of a sudden the direction would probably be on the downside. But until you see that, I wouldn't jump the gun. That's what I look at in there. Let's look at some of the other stocks. Let's look at Google on a daily chart. I'm going to make these bigger and make it easier for everybody. So you see on here on a daily, you can't tell anything yet. We're still in this weird level right here that might be a diamond formation, but you just can't tell yet. So this is what I do every night, is I'll go through every single momentum stock that I like. I take the Amazons. And also, just so you know, on the forum today, somebody asked what stocks in my universe do I look at. And in the forum, you'll see that I actually posted my watch list from Thinkorswim, so you could see all the momentum stocks I'm watching, the Googles, the Amazons, the Netflix, and so on. But if you look at this, you look at Amazon, same kind of chart as Google. So then take some of the other ones. You can take, like you saw, the Facebook. You could take Priceline. How does that look? Same kind of charts where you can't tell, are these going to be a breakout or a breakdown? You just can't tell yet. One thing I can tell you is that when the Fed didn't tighten, it looks like they're not going to tighten because of the employment report. Because of that, a lot of the Chinese-related names took off today. thinking that China now, that the emerging markets are going to go up, because usually tightening by the Fed hurts the emerging markets. If they don't tighten, all of a sudden they could go up. The Chinese market's down, and a lot of the Chinese stocks that trade here in the U.S. just have these gigantic short squeezes. Check out Baidu today. Doesn't look that impressive on there until you put in a 1 hour chart. Look at that. Now, the one thing you can notice about this, it was starting to look good already. That's the one thing. Look at Alibaba. Here's another one. Look at that. They were forming these little upside flags. Now, the one thing to notice in this is I know so many people that were jumping the gun and trying to buy Alibaba in these areas. As you see, the key was to wait for the ATR buy stop, and you don't have to buy the first time. Like I've said, it creates an overbought condition. You wait for this flag right here, and then you buy, which would have been around 58. You would have made 5 points. But when you see that on an hourly chart, then you quickly, when you see that kind of development, as you're doing your screening right in this area, then go to a shorter term chart to time your entry. So take Alibaba, take in a 5-minute chart or a 2-minute, either one, and you could see that the second it broke this area, it just exploded all day. It was above its ATR stop and just went straight up and never really looked back the entire day. You see the negative divergence in here, but if you were long, I wouldn't sell till you got that first ATR sell stop cross. So you would have made at least 4 points. So I hope this helps everybody. Like I said, my email is chris@simpleroptions.com. But on the Simpler Stocks side, send me any questions you have in the forum, and please check the charts in there that I'm starting to post more and more. I did 4 today. I'll probably do 6 a day next week, starting next week. Thanks again.